Call recording is on. Okay, so we're ready to get started. And to begin today, while I do this weekly, I do the same thing every week for those people who are on my private feed. The rest of the people in this meeting are people who have taken the class and aren't necessarily part of the feed. But we're going to cover a couple things, and I'm going to finally make one promise complete that I said before. So to begin today, we're going to discuss something that I have avoided discussing. And we'll see if an actual screen change occurs here. But before we begin, the one item I've been avoiding, which is psychology. I want you to understand I am not watching the chat window, the text in there. So if you're having problems with audio, you're not hearing this. But if you're having any problems in the rest, you got to log in, log back on, remove, start over if you're having any issues, because I'm not going to be seeing if you're having troubles, other than the few times I check during the call. So I'll ask you guys once again, if you're hearing me, hit a Y and just tell me you're all clear. Okay, so we're going to discuss psychology. This is something I have avoided discussing, and the reason I avoid it is because it is the hardest aspect of trading, and I don't know that I'm qualified to describe the perfect psychology for a trader. I think this is truly individual. And so I say this having sat next to Dan Zanger, who has zero psychology problems. If Dan loses $1 million today, it means absolutely nothing to his brain. He doesn't beat himself up. When Dan lost $20 million in one day, he's the kind of person that he absorbed it, and within a few minutes, the anger was not useful, and he moved on. So if you are somebody that has the perfect psychology, you have that gambler instinct, you don't mind risk, you can handle ups and downs, I'm probably not speaking to you. I'm speaking to the average person who has not had the big swings and really isn't built for massive exposure risk, huge swings in equity and the rest. Dan, like I said, sitting next to him was just amazing. I literally saw a person who had no feeling, no emotion about a trade. I don't think I've ever seen Dan really pissed about a trade. I mean, even when he got hit on AAOI, I remember him just saying, hey, they get you. Once in a while, they get you. And he moves on within maybe 7 seconds. It's that fast. I have not seen Dan beat himself up. I can tell you I have. I can tell you I have messed up in a day and spent hours and days reliving and trying to work with that. I have also had to work on not beating myself up and getting past that psychological problem. So knowing that each one of us are in a different place, we're sitting in a different area of psychology. And I avoid the subject even though it's the most critical, because I think a Mark Douglas is better at this. I think there are some people are better at that skill. Others are going to have an easier time just simply playing the mathematics and understanding the other aspects of this. So we're going to move on to the next page. I want to make sure I've got here. And in psychology, we're going to discuss why traders lose money. And they lose money with a proven method. Now understand, the reason I separate it is because some traders will lose money on a losing method, meaning they're trading 1 for 1. They put up $100 risk or $1,000 risk or $10,000 risk or $100,000 risk. and they're trading to make that same equal money. And in that case, they're going to lose probably because of commission and slippage and a bad streak and because they have little edge. These are the reasons those people are going to lose. And they should not be a surprise. So if you're one of those people, where you are losing with an improper, you don't have a well thought out method, then losing is understandable. Now let's get to reality, which is, why do traders lose money even with a proven method, even when the math says they shouldn't lose, even when the simplicity shows and they can prove by going back and researching the ideas are working, why do they still lose? And we're going to go through those right now. And while I gave you a list, they're not in order of what importance is, but I need you to think about this, because many of the students that are not as successful are the ones that are not taking this into account. So the first one is discipline. Guys, if you're going to, and girls, I'm sorry, so folks, if you're that person who is jumping around like a jelly bean, if you're swayed by everyone's opinion that today they're a genius and you have to now follow their trades, you are not going to succeed. I'll give you an example. If tomorrow one person walks in chat, makes the greatest call on XYZ stock, the stock rips up 17% in one day. The person killed it that day. If you follow the next day and follow that person now thinking, oh, they're fantastic, they are going to lead me to profits, you're dreaming. Your job is to follow a consistent process. That is not disciplined. If I followed every person the day after they made a great call, I might as well burn the cash in my front lawn. At least I'd get to watch the fire. This is a way to throw away money. You must have discipline to your approach. You don't have to follow my approach. There's a very good reason in this class I have not focused and pointed to people saying, you should take this setup, the one I say that's best. And the reason why is I have watched people fail miserably on a perfectly good setup because it didn't match with their psyche. So what I can tell you right now is have discipline, have self-control, and follow a plan is a big part of it. Next one is self-destructive behaviors. Self-destructive behaviors are those where you know in the back of your mind you are doing things that are hurting yourself. Some of you will not admit it. I can tell you I have done it myself. So please stop here. If you want to make this part of a major change in your trading, you have to change. And in order to do that, you have to accept some of these behavioral issues. Self-destructive behaviors are things like firing again on a trade with no layers, no setup, just because it shook you out and now you're jumping in because you see it's going back up. That is self-destructive. Why? Because clearly your stop was there for a reason and you got stopped, and rather than reevaluate and realize that your stop told you something was wrong, you emotionally went back in. I don't know about you, but they don't print on the dollars I use to pay for things the name of the symbol that I traded. It doesn't say on use dollars from Google, use dollars that came from DE. They are just dollars. So if you tie yourself to the emotional aspect of being self-destructive, if you're trying to prove something by buying it back or saying that you missed it and now chasing it back, you're doing things where all of the mathematics have been thrown away. All of the psychology now is lost because you now are having to beat yourself up, which puts you on the defense rather than the offense with this behavior. And you're now sitting here upset and disenchanted with trading. Trading's not at fault. The market is not at fault. The world is not at fault. Donald Trump impeachment talks today are not at fault. I need you to understand something, even though it's at the bottom of this list. It's one of the most important, and that is you must take responsibility. You must take responsibility. Guys, when I lose money, it's not the market's fault. It's not the industry's fault. It's not the sector's fault. It's me. And I know that sounds crazy because I'm not going to beat myself up for it completely, but I am going to say to myself, in some way, what did I do to contribute and cause this? Maybe I had too much leverage on them. Maybe I saw signs and I ignored them. Maybe I bought too many in the same group. Maybe I can't control what the market is going to do in the end, but I controlled the aspects of my behavior. The reason why I say taking responsibility is because I see people all the time who, want to blame Dan because of breakout fails. Guess what? A ton of breakout fails. They breakout fail all the time. The best stocks in the world breakout fail 30 times to set up and create a base. It is normal. The game isn't trying to be about accurate for breakout trading. When you're buying a breakout from an extended, long period of consolidation called a base, those base breakouts are not reliable to all follow through and expand up 30, 50, 100%. What they are reliable to do is fail generally in their attempts unless they have exemplary volume, strong accumulation, or very strong price action. In those cases, price will break out of that range, and then the math takes care of the rest. I have had years where I was so focused on breakout trading, and I did more breakout trading than, let's say, pullback trading, even though that's what I prefer more often lately because of the way the markets behave. But I have had periods where I was wrong 70% of the time and made over 100% in very short periods of time on breakout trading alone. The accuracy didn't matter. I was catching a Google for a 70-point run with a $4 stop. I was catching a stock like a Facebook with a $3 stop. What am I saying? Like a $1.50 stop, and it went up $30. So what I need you to understand here is that all of these aspects of psychology that I am having to grip here to explain to you have come about for what's the problem with our brains. We have issues in our brains when dealing with a lot of these behaviors. But the reason I'm bringing this up first today, and the reason I'm drawing into this subject, is because if I don't deal with this now, this problem will expand, and you will still blame technicals as being the reason why you lose money. Guys, you can be wrong all day long and still make money if the winners are big enough. I think CLT in the private feed wrote a little note last time in our last class, something like at a 33R trade, 33 times risk, you could be wrong 96% and still make money. I forget what the statistic was. But the reality is you don't have to be right. You just have to be profitable. And in order to do that, you need bigger winners and smaller losers. Dan has a tweet that I just sent out not 2 days ago, and it's one that he told me, which is, funny that people say that accuracy is most important when less than 30% of my trades have been the ones that have made me rich. And it's the truth. Dan has lost money on probably about 70% of what he does. And 30% or less of what he does makes him millions. So if you think the psychology problem is hard for pullbacks where the accuracy can be 50, 60%, 70%, Imagine knowing that you're going to be wrong 7 out of 10 in advance and still having to deal with that psychology. It's not easy. It's hard. So admittedly, this is what makes this business hard. It's funny that I actually find sometimes the most brilliant people, the sharpest minds, have the hardest time grasping this business. There's a joke, the Dems and Dozers do well. You know, the guy who isn't real complex, who doesn't want to get real technical about worrying about the feeling of every dollar missing from their account, they will be able to handle their plan easier than the person that's balance watching, staring at their balance all day long and worried about every dollar that's going in and out of their account. So while I jump around here, what I need you to understand is take responsibility. You have to make decisions. You have to stop self-destructive behaviors. You have to walk into each day with discipline, following your rules. Now, if you're struggling, I will give you rules. If one of you comes to me and just says, I give up, just give me a trading plan that you think is a reliable, consistent one. I will knock out the areas that I don't like, that cannot work for my psyche, and I'll just trade it. Of course I'll do that. I'll tell you to do M bottoms. I'll tell you to do bottom of bull flags. I'll tell you to do trades where they're the bottom of a channel mixed with a 2B, mixed with a whatever. But if you're listening to your own head, it's telling you what you are comfortable with. The one thing I've told a couple of people recently to do is go back to your last 10 big winners. See what is common about them. What was comfortable about that caused you to be okay with trading it and allowed it to become a bigger winner? For some of you, it's going to be pure breakout. If that's the case, you just tighten up your breakout rules. If it's a pullback that you've been killing on the bottom of a channel or a bottom of bull flag, which you know on the feed I show a lot of bottom of bull flag breakouts, which I like to do and things like that. Whatever that is, we want to spend more time on that. And the reason isn't because that setup is the best. That's the funny part is, what is the best setup doesn't mean it will work for your brain. I could show you the best setup in the world, and it requires you to buy at 52-week lows. And you'd look at me and go, I can't do that. I'm used to buying highs. And another person would look at you and say, I would rather do that than buy highs. We are all different human beings. We have different psychological issues with how we approach things. And so while I won't suggest 52-week low longs, I will say that we need to match the proper setup to the proper psychological, makeup. The next one I'm going to cover multiple times is overtrading. I cannot tell you how many I see that are overtrading. Look, if you've got all the skill and you're the intraday whiz and you're making money and you're not complaining to me that you're hurting or that your accounts are not going anywhere and you're not struggling, if you're consistent, go at it. Keep shooting away. I have nothing to say to those people that are consistent. Nothing. You should just use my tools and make more money. I have people in this class that are brilliant, brilliant folks. I have to tell you, on my private feed, I have people that are absolutely brilliant from all different walks of life, using advanced tools, working at major shops and handling far beyond the money that I handle. And what I find is, for those people, they didn't need me. They were already making money consistently. My layers add to their existing setup, and now they're doing even better. Great. But they don't need me. If you're needing the help, you're really needing and struggling, then the first thing I'm going to tell you is your overtrading is the first thing we cut. Why do I say that? Well, from a psychological standpoint, if we approach this slower and you're not getting beaten over the head with 3 losses at one time, you'll probably be able to stomach this a little easier. So we want to slow down the process and make it more plodding and relaxed and less pressure on you. This would help for those that are really struggling. Now, for some of, like I said, I have a very big mix here. Out of all the people on the feed, I'm getting maybe 5 letters minimum a day from people who are just absolutely destroying it. And I'm getting, though, the other day I asked for the people who are struggling. I maybe got like 10 or 15. It's not 15. It's like 10 or 12 that said they really could use the help. They're struggling. For the people who are struggling, I instantly want you to cut your number of trades down. If it didn't work for the last 1,000 to become consistent, then the 1,002 is not going to work. If it wasn't consistent on the last 7 years, year number 3, year number 7 years and 1 month, you didn't change it in one moment. It didn't change, so stop everything. Let's slow the process down. If you're consistent, I need to shut up there. And the reason I need to shut up is based on some people's consistency, their percentage will be completely based on the number of trades they take. So if they can find 6 more based on their math, they're going to have a higher return for not listening to this advice. So I separate the people in 2 groups. You're consistently profitable, not just in great markets. Some people from November have recently told me that since the November class, they went from being completely a mess to totally consistent. And I'm not just talking the nice months like February and just recently the last few weeks. I'm talking about the rough periods in between. They were doing well during those as well. That person can shoot on the next trade and not have to worry about what I'm saying. It's the person who's struggling that I need to get to do less. Now, when I say trading less, I'm also saying over trading in trying to exit and scale and enter. We want to slow the entire process up. We want to get in a trade, define the risk, know what the risk is, accept psychologically what that risk is. Guys, if we get in a trade and the risk of that trade, let's just use for round number sake, a $100,000 account, and the risk is $1,000. You're willing to take a full 1% risk of assets on that account. That $1,000 loss, for psychological reasons, must be accepted at the time of entry. Before you even begin, you can't be sitting there going, oh man, if this works, I'm going to make $4,975 at 5 to 1. No, that's not how this works. You're going to look at it, see the trade, and say to yourself, if this doesn't work, which a lot of my trades don't work, and I can accept that over 50% of them are wrong, or whatever your formula is. For some of you, you're at 70s. Right now, I'm in the 60s, jumping around. For some of you, you're even higher, and for many of you, you're much lower than that. So knowing that, if your average is that you're right 50-50, then you have to know when you're taking that trade, you have to put the money into the trade and go, I'm out right now $1,000. There's at least a 50% chance, so let's not kid ourselves. It doesn't even look that great. I'm accepting the loss right now of $1,000. The reason that needs to be done is we can't work to protect our stock. And the psychology why we can't is because how many of you, and now I just have you show me by a why, how many of you have tried to protect your stock by selling early only to watch the stock take you out, you sold it, and then it ripped back up but never touched the original stock? I don't know about you, but that's more painful than the loss. I don't know about you, but to do that to yourself has been more painful to me over the years than just taking a darn stock. I cannot tell you how many times I did that to finally give up, where I would just sit there and go, oh, forget it. This isn't working, and it would just cut it. And I was 20 cents into $1.20. And I'm sitting there cutting it, and the next thing you know, it goes another 10 cents lower, rips back up. The trade works. The whole idea is phenomenal. I did all this homework. I spent 30 minutes on this stupid stock, and guess what? All I did was take it out. It's just, I cannot tell you the psychological damage that does. The other part that does to you now is when it fails again. Now you're sitting there. It goes in, and you get back in, and then it fails on you. This is the best. You go back in because you realize you screwed up, and then it fails on you, and now that is a loss. And now you're wanting to go and throw the screen across the desk, and you're ready to go get crazy and want to get your money back. And so I'm already telling you, from a psychological standpoint, I avoided this whole discussion because this is not my strongest area. I have done every mistake I'm going to talk about in general, in some way, shape, or form. So what I'm telling you to do is to determine what you're going to lose in advance. The next one I'm going to say is not letting the trade develop. And I skipped one up there on purpose. I'm kind of jumping around because I want you guys to stay with me and not be reading. I want you to be focused on what I'm saying. Not letting the trade develop and getting too smart with your decisions. Guys, when you try to outsmart the market and try to act brilliant, you miss out on the wonderful thing that's called the trend and allowing your winner to run. I have done it time and time again where I got smart and I thought I could read price and I let some 15-minute, or in my case, 30-minute chart tell me what was happening, and I sold something, and I looked over at my weekly and realized this is absolutely meaningless. Daily, this is absolutely meaningless. And I just cost myself on an extra 500 or 1,000 shares, an extra $8 on the stock. This is part of what has to be obliterated from your mental belief system, which is when you took the trade, you planned where you thought was a reasonable stop. I've told you guys very clearly that I will look. It's right on my watch list, the ATR. In the case of Cena today, the ATR, the average range of that stock over the last default, I think, is 14 days for that thing. Average true range is $3. Stock's down $1.81. Meaningless. Nothing's wrong. If I was entering on Cena and I had to think of a reasonable stop, if I tried it with $1, am I expected to probably have trouble? You bet. It moves $3 a day. So I'm asking for a third of its range. I better be really on my mark with my setup. If I tried to enter Google with the same size stop as Cena, I probably am going to be stopped out even if I have the best trade setup I could possibly think of. And that is, again, we need to understand what the volatility of the instrument is. If you're trading AAOI and the stock has a $3.91 range, here is a $61 stock that moves over 5% a day. Today was a small day for AAOI. It's down today $3.62, and the thing is more like $3.91 every day. So if you go to use a 40-cent stop on AAOI and are stopped, you almost have to say to yourself, duh, of course, I'm going to get obliterated. The stock moves 10 times that in a day. We have to be reasonable in our expectations. Losing is not our problem. Small losses are normal, acceptable, and are handled by every person in the industry. That is what I hate about chat, is that you will see a bunch of people never talk about a stop, but talk about all their winners. Guys, the stops are going on all that time. 99.99%, including Dan Zanger, is taking heat on it today. We're all bloody red. The one person who says they're not, for all you know, they got obliterated over the last 3 weeks. We all get hit. Stop dreaming that you're going to find the method where you never take a loss. It's just, you're dreaming, leave the industry. Now that I've given you some examples here to start with about getting too smart, let's move back to the other one, which is the psychology is affected mostly by size as well. Meaning, the reason why many of you just agreed that you do all these behaviors, you cut it off even though it hasn't hit the stop, you want to get back in, so you get back in, and then it falls down, and then you take the stop and you're angry. Most of this is because you didn't accept the loss and weren't comfortable with the loss before you started. And why weren't you comfortable with the loss? Because of the amount of money at risk. Period. There was a reason why I put it in this order and that I wanted to discuss it in this order. And that is, we moved back to that most people here, most people in trading, have not accepted an amount of money that is a loss where it is completely done before they start the trade and have accepted it at that moment. Many of these other self-destructive behaviors, these discipline issues, will be improved by just picking a size that will not mentally pressure you. If you can't handle 1%, which might I add, I don't always do 1%, I've said that. I'm often at half or 3/4. If I start to increase, I usually start to mess up. I don't know why, but I'm built a certain way where whenever I try to size up, I become clouded or blind in my ability to read the market. In fact, I would say to you, the odds of the trade failing double when my size increases. And it's because of the money becomes too big of a factor. The fact is, if you right now take a trade and you say, I'm out $500 when this trade fails. This is X% of my equity. I accept it. And if this happens 6 times to me over the next 2 days, I'm fine with it. It will not affect me. Am I being honest with myself? And you say yes, you move on. At that point, I believe there'll be an improvement in letting a trade develop is still going to be an issue, but it could be improved by that. You will definitely not necessarily protect your stop like you're getting killed by the market every time it pulls back 4 ticks. You will still find that there'll be other behaviors that you'll do, like taking the money early, which is something that is a separate problem. But generally, by getting the size right alone, you will solve some of the discipline issues. You will solve some of the problems when it comes to allowing the trade to work. I'll also tell you that the gain may be smaller, so you'll also probably have an easier time holding it and letting it work because you're not losing that much money when it pulls back. Now, I know that stinks, and I know that you're not getting rich this way, but the answer is it's first before we worried about how to improve your technicals. If you don't have the psych right, if you don't have these areas improved, all the technicals in the world are not going to save you. If I show you the most perfect setup in the world, and you know it is in your heart of hearts, but you sell it early, you move the stop up early and get stopped out in noise, you pick too small of a stop because you don't want to take the risk, so you use 30 cents where you needed $2, any of these behaviors, and the best setup in the world is destroyed instantly. It's not the setup's fault. It's not because the market is just tough on you. It's not because the market always stops you out. The market doesn't know who you are and doesn't care. You are a meaningless count, and so am I. What it does care about is playing all of the sides of this game, and the algos are sitting printing money by drawing us from one side to the other, faking and fooling humans and retail. Now, knowing that, you follow and look at this list, and you remember to always be working on this, and the other areas will fall into place. Now, sometimes I go very quick. I speak very quick. It's my nature. I'm quick. So I need a yes in the box just telling me, are people understanding all of the caveats of this psychology problem? Why I avoid it, what the problem is, why I suggested to cut size first because it solves some of the other problems. Honestly, I can't help you to succeed unless at least you're working on this. If you've ignored this page, I could show you the greatest setup in the world and you will lose money while everyone else could make money. You have to work on these issues. If you're selling winners too quickly, you need a plan. And guys, I haven't forced anybody to plan, but you really should be you should really have a written set of rules. You should really sit down and say, look, here's what I'm good at. And here's how you kind of write it. I'll tell you an example of how I write certain things in my mind. I don't do it anymore, but here's something I'm talking about. I'll say to myself, Randy, we're having a rough couple of days. The market's not doing great. Where are my strengths right now? And the answer is, well, I'm hyper. I like to press buttons, but the fact is my best payouts lately have been the ones where I really wait for those key areas and I'm incredibly picky. So better for me not to shoot as often, better for me to wait for my multi-layer areas, really define areas, especially with the market being a little rocky. You say to yourself and figure out who you are as a person. You find what your own internal sense is to be comfortable. You determine that, and then you write a plan. Well, I know I'm killing winners lately. I see it. I'm doing it a couple of times. I hate the fact that I sold shop too early, which I did. And so I say to myself, okay, so here's the story. The market is trending up other than until today. Let's say this happened 3 days ago. Market's trending up. Things are strong. I'm going to make sure that I've got 20% out at first 5 to 1. I will move the stop above the break even because I don't care if they take me out. That means there's something wrong. But after that, I'm really going to try to hold these winners until there's either a really clear exhaustive signal, which I'll describe that as being 5 straight days up, or I'll describe it as a big reversal pattern equaling this or that. But I'm not going to sell every 2T and every TRL tap because right now the market's been strong and I blew some other trades because of it. When you sit down and you level with yourself like that, you can write up a proper plan and do it. Now, should you keep changing that plan? Not a chance. You should do that plan and do 20 sample trades and see what was common about those trades and learn from the experience and make tiny, tiny tweaks. You don't want to make one big change. You want to do tiny tweaks and improve it. Guys, how many of you have the data to evaluate right now? I'm asking a question, don't answer yet. How many of you, I just want to see a why, how many of you can tell me exactly what setups and confluences are working for you over the last 3 weeks, what your risk reward is, and your percentage of accuracy? Let's see if there's anybody who's going to put a Y. See a few? Ah, yes, the Edgewonk people. Yes. I got to call those guys. They were promising me they would build me something custom for my class if I contacted them. So don't go buying Edgewonk. Let me get a little leverage on those guys to have them build something for us. Do not go buying the product. We'll tell them we've got some people ready to sign up and tell them what we need. And I'm going to go to a couple of guys that I'm close with on the feed like CLT who uses it very deeply and get them to negotiate whatever features we need. So for those of you who use Edgewonk, then you know this data. If you knew this data, then you can see a pattern of failure in front of you, I assume. And when you see the pattern, you can identify and make small course adjustments to your behavior. For 90% of you or more, in fact, probably about 96% of the people in this room right now, for about 90, so I was reading something, but let me focus here. 96% of you, let's guess, I'm just making up a number that sounds about accurate. About 96% of the people who are in this room right now have no clue of what I just asked. They cannot tell me what trades are working. They cannot tell me what their R is. They cannot tell me where they've been stopped and what the accuracy level is for them recently. They cannot describe to me any statistical data or informational data that describes what is right or what is wrong with their trading. Let me already say, anything that we track in the world, we have a chance of improving. Without tracking it, we have no idea. I have no clue why you are doing really great right now if you have no way of deciphering it. In fact, a couple of people in the last week have come to me with such outrageous results. Outrageous. 30% month, 70% this year. Just, they're beating me. And they're literally coming to me saying, thanks, Randy, this is the best. And they're killing it. They're on my private feed. They're like, I got a letter this week. One person wrote, I will be here as long as you allow us to be here. This has changed my trading, and I've been doing this for 20 years. I mean, I'm getting letters that are unbelievable. And the funny thing is, the first thing I say to those people, I think they're probably looking for me to say, yeah, and I do. I say, nice job. The next thing I say to the ones that aren't doing this 20 years is, do me a favor, please, go take a picture of all the trades that worked and write down why it worked, and take some notes right now and tell me what the setup was, and go and document this right this moment. People come to me with a great comment. I realize this is the first time in my history that I'm not upset when I'm losing. I'm totally calm. Somebody said that today to me. Said, I'm totally calm. I'm not stressed out anymore because I have my plan and it's working and I'm doing it, and I can afford to lose a little bit. It's part of the math. And that person, the first words I said was, awesome job. Now, please document that right now so we can get back here. And the reason why is there's going to be a moment when we all are rattled, when things aren't working, when you go home from a night like this where I want to eat peanut butter and jelly sandwiches, and you have to step in the next day and get right back on the horse. And we need to make sure we're documenting what works and what works for us. Remember, there are many of you who are breakout traders, and I am a breakout trader. I mean, I call live breakouts when I would take them. The end result is I'm just a picky breakout trader. I love out of a base. I'm very picky. That's okay. The end result is, doesn't matter. I'm comfortable to a point with breakout, and I'm more comfortable at other things. If you're more comfortable with breakout, just note that you need to document and have a history so you can duplicate this. Okay? Now, I lived that one, CM, way more stable with trading. Okay, so that's awesome, Zulu. I mean, that stability is going to only get better if you follow the items on this list. Cut the over trading, cut out, I didn't even mention negativity, I skipped it, but the fact is there are some people that they almost want to feel bad for themselves about losing it. That one's, I can't even, it's hard to address because I don't know how to solve it at all. If you're negative, if you go in thinking you're going to lose, hell, you're going to lose. Confidence is required to win at this game. But the end result of all of this entire discussion, which I hate discussing, like I said, I'd rather you get this from Mark Douglas because that's who I listen to. But realistically, if you take any advice from my own experience of losses, which is what teaches this, if I've learned anything, the size will kill you if you don't have your mind in control. You must track if you're not able to understand what works for your brain. You must do that. And 96 to 97% of you are probably not doing that. And of that 96%, and this is a really mean statement, and I'm sorry, I'm not trying to offend anybody really, but I'm going to guess the entire 96% are the ones that are really getting creamed or losing, are the ones who need help the most. And that is because they are still stabbing in the dark, doing what they did yesterday, praying that it pays them. That's not a trading plan. The plan is to take a trade, follow it, do it. I told you about one of my friends who's a trading guy. He actually came on the chart pattern, and he turned nothing into like $8 million. And he's a friend of mine. I haven't talked to him in a while. And he literally, when he was talking to me about setups and things, he would just say, like, I literally take a trade, and he said, I sold it up here. 2 days later, it was a $3 gain, and I moved on. And then I would look at the symbol and go, it's up $12 more. Randy, when I took the setup, I planned what I was going to do. I took the trade. When it ended, it ended. I follow my plan. I don't feel a bit bad about where it goes. I would have had to have taken a whole different trade to have done that. I'm comfortable with what I do. That's his plan. Stick with it. That's what's reliable. If your plan is you're going to buy winners in a strong trend on strength, and you're going to move your stops up, and unless it breaches the 21-day moving averages and closes below it after testing it, you are not selling. Look, you're going to have a rough period where that system doesn't work. You're then going to have another great period where the market is strong and it's going to pay you huge. Guys, this industry is all about timing. Look, if Warren Buffett started in 1 year from now, he may not ever have had his record he ever had. He started in a period where we were rewarding these companies with a moat. Maybe the next phase won't be like that. If you started in 2000, right after the bubble burst or whatever, and you looked at it from a fund perspective, your next 10 years plus were a totally sideways move. I mean, the market didn't break out until what, 17, 15 years later. So the fact is, timing has to do with this. There are parts of this you can't control. The parts you can control, you follow your plan and you create it to be profitable. Profitable is the key word, and I want you to understand this because some of you are excited about your returns. But what's important to me is consistent profitability. Nothing is more important than compounding and consistency. It's not about that you did 70% this year, although I'm just going crazy for you. I'm so happy. That is awesome. But what makes me even happier is you're having rough months where the market is difficult and you're making money again, even with the difficult market. You're transitioning through good periods and bad periods without having been dunked in the dunk tank. You're doing consistently well. That to me means that compounding will work for you. And I don't care whether you compound 10% or 70% or 180%, you're going to do well as long as you're compounding returns. Plus, it's easier on the psychology. You're not going to have the massive ups and downs. Now, some of you are built for the massive ups and downs. It's just not me. Okay? I want you to know I read a book on a trader. He's out there still. His name is Peter Brandt. And I remember one of the things I read in his book that was interesting because here's a guy who had all these claims of being so consistent. He said for every 37 out of 38 years that he traded with an average of X% of average, which were all positive, he still had an average of a 10 to 15% drawdown every single year that he traded except for one. Guys, pros, anybody, even with all the consistency in the world, we all draw down. So it's kind of like we need to plan for psychological reasons for all of this. If you change your plan and do all of this to change your plan a month later, and a month later after that, and a month later after that, you are out of business. We create a plan and we tweak minor adjustments. You know, do less to play with the system and let it work. Now, we're done with that slide. I talked a long time on psychology. I wanted you to understand. Remember, it's what works for you. It's about what works for you. Not what works for me, what works for you. You have to be able to absorb it. If you cringe at the view of a breakout, don't you dare force breakouts. Start working on yourself first to determine how you're going to be comfortable with the trade. Because I guarantee you, if you don't have any confidence, you will lose money. Sedona method. I'm not giving you the information of how to do it. I'm just telling you about it. Go search it on Google. All of you know what Google is. Go search the Sedona method. It's a simple psychological method that I used before to get through some very rough periods in the market. It basically is a process of asking yourself a question, which is, how long do I want to hold on to this? And once you ask yourself that question, you've basically done punishing yourself. You have to get to a point of where you can accept it and move on. That is what this is. It worked for me. It was the simplest 5-minute thing, but it helped me multiple times when I was struggling. Next one, play dumb. That's correct. You're going to play dumb. That means stop trying to outsmart the market and sell the high. I talked about this with somebody who called me today who needed some help and said, you know, it's hard watching the money coming back at me and all this stuff. The truth is, your job is not to try to sell the high. If you've got a big winner and you're up 30% on a trade, your job is not to sell the exact high. Your job is to try to let the winner run. If you can't do that, you will always be killing your best trades. Kill the losers. Kill the ones that aren't working. Don't kill the ones that are working. Now I'm going to get a drink of water. Pause for me 1 second here. I'm also going to shut up a dog. So hold 1 second. Okay, can everyone hear me again? Give me a Y. Okay, so the end of this discussion is playing dumb. Please don't try to sell the high. Remember, I am completely in agreement with you if you're near being red, if you're about to lose on a trade, if you're near your cost, or if you're in the red, I totally understand the protective or stance of protecting your basis. That is something I do. If the whole market's coming against me and they're all hitting my stop, believe me, I'm in protective defense mode like I was today. But if that is not the case, if you're in profit on a trade and you're up and you're over that 5 to 1, I totally get that you want to move your stop up to a logical support area that if it fails, you get out. But I also want to remind you that the ones that work the best end up being some of your biggest winners, and that one trade that works really well may be 80% on a 20 to 1 trade. It may end up being a huge winner after the first exit. Some of these you take 20% off on the first 5 to 1, and they keep going for weeks and months. You do not want to kill that and defend that and try to defend your capital against every 2T and little tiny pattern that happens at the top of a move. And proof is, and I had a logic behind why I did it, but I reduced DDD yesterday, and my reasoning was, or was it the day before, and the reasoning I had, which was logical that I understand in price, was it had had an exhaustive like move, multiple days in a row, just straight up. And then it had a triple top in the morning, and I said, I'm going to take some off here. I am at a point where I can do that. If I'm consistent, which I am, I can pull that off. If you're not consistent, your attitude has to be the money that entered your account is not yours until you close the trade. So those unrealized gains are going to drop when you fall off of every little topping, cap of the highs. If you kill every trade that way, and you don't let your winners to work, and your accuracy stinks, you're really in trouble. You're losing money. You can't have both. You can have horrible accuracy and still make money if your winners are big enough. You just can't have horrible accuracy and horrible risk reward and still survive. You won't. You'll lose money. Somebody just wrote the 8-week hold rule. The 8-week hold rule. Yes, if you read the books that Dan suggests, O'Neill suggests that if your stock is up 20% in what is it in less than 4 weeks, you hold for 8 weeks, and I think the general rule is good. I don't have a problem with it. I don't follow it verbatim, but I will basically say it is true. The stock that breaks out the strongest for you is the one you want to try to hold the longest. The one that busts out and just flies from your entry, you want to try to hold those. I have different conditions I look at, but if you read the books that Dan suggested and you want to follow that, put that rule up, it's fine. I tend to try to make my first scale at 5 to 1, and then I use price action to sell. Now, if the market's really hot, I ignore some price action signals. I wait for a flip against me. But if the market has been weak, I'm more aggressive on those exits. And I have reasons for all that. Now, in order for you to actually get the meat of this discussion, I don't want to keep you here for 7 hours. So in the feed next week, we're going to discuss more about writing rules for exits and all the rest. It's too much for this, but we're going to move on for now, but that is something we'll get into further depth. Next one, doing less. Probably the most important. I said it before, but do less. More study, more reading of the market, more understanding what price is doing, more understanding of what is happening in your sector, in your stock, than worrying about having to execute. For some of you, you would be best having 3, at most, 3 bullets per week to use in your rifle. You are allowed to have 3 shots. If you have used your 3 shots, your week is over. Use them sparingly, use them carefully, and make sure they go into your journal so you can start to figure out what's working for you and what isn't. And so we can tweak moving forward. Now, we're going to talk about one more thing, and that's basically trading a layered setup. And this is what some people asked me for, was to walk through a setup start to finish of how they develop. And I purposely did not cherry pick and picked one that is working incredible, because I don't control the outcome. I only control the process to enter. So I want to make sure, does everybody see trading a layer setup on their screen right now? Okay, good. I'm going to go slowly because I tend to talk a little fast, and thank God we record because it allows you to slow down and hear what I'm saying. But let's move to the next page and we'll discuss it. So this was a trade that just happened. It's DE, okay, John Deere. And I did not pick this is because it was a big winner. I have plenty that work a lot better than this one, but I want you to see the parts we control. It's the freshest in my mind, and with the limited time I have, it's the first one I could put together, and I have one other for you that CLT helped me put together. So the first thing we start out with on any trade is we want to start out with a larger time frame. And we want to ask ourselves, layer number 1, what is the trend on this thing? And in the case of DE, this is an uptrend. We can clearly see this stock is in a strong uptrend right now. It's into highs. It's been sitting weekly, kind of going sideways up here. There's a trend in DE right now. Market's in a trend as well. We also see, again, this is a weekly chart. We're on a high time frame chart. Why is this important? Well, let me say it this way, folks. If you were a child and I could not explain to you how to trade at all, but a few statements, I probably would have you buy support and sell resistance. And I would pick an area where if you got it right, there was a huge open hole for it to work. You would be risking small for an enormous potential grand slam, which means I know you'd be wrong a lot, but if you hit one, it would pay for everything and more. And so that's why we start out with a big time frame, is because if we're looking for some real reward from a trade, we can't see that fighting around with a bunch of kids in the kiddie pool. We have to go up to where big professional money is viewing and seeing this instrument, their demand and supply of it. And that's a weekly chart. Some people do a monthly also. I tend to stop on the weekly. My time frame is not holding for 6 months to a year, so I tend to, be more of a holder for weeks. I've held some stocks for a year or more. I used to hold longer, but I tend to think that weekly covers enough. I do look at a monthly chart at times. So we start out at the top, which is what is the larger time frame of what's happening on the larger time frame. And that is, in this case, we're in an uptrend. And while I have these moving averages on here, I don't really use moving averages on the weekly. I just have them because I switch it to a daily in this case. So we'll get to the next one. Next consideration. These are not yet layers to enter a trade. These are thoughts and considerations. Sector strength, fundamentals. I didn't put it there, but I already mentioned market before. If you're going to be only using 3 bullets a week, you have plenty of time to evaluate and look at what's going on with the sector. Many of you have seen me call many sectors long and short that have worked very well, and sometimes they don't. But it's because I looked at the name and the names in its group. If you've read the books that Dan suggests, or you can use programs like MarketSmith, or you can use other applications or programs to do this, but you should, if you've read the books and the rest, you should understand that fundamentals and sector strength are a big part of what drives certain stocks to move dramatically. I'm not talking about slower names. There are other things that drive them beyond their growth formula, new products, whatever. But the end result is, if you're trading the names that Dan tends to focus on, a lot of them are strong fundamental names. The idea is, why not have every factor in your corner? Strong earnings, strong growth, good sector, all of that, and then worry about technicals. The more that you struggle, the more picky you can afford to be on selecting setups. You're still going to lose money on losing setups. The only difference is when you get it right, you have a chance of a better running stock because it has more reasons for it to move. That does not mean you will be any better accuracy. I want to make sure that's clear. Now, do I spend a ton of time on fundamentals? No. I tend to use a simple screen at times in MarketSmith, which on the feed, you don't have to subscribe to the $1,500 for MarketSmith. I will post up a list of the universe symbols that I'm looking at, and you can use those. But if you're not, at least look at the sector strength. Look to see what's going on in the group. I've been noticing airlines recently, and you notice 1 alert go off and 2 alerts go off, and now you got 12 alerts. This is a good sector to watch. So you look at what the sector is doing and consider it. You consider the market and you consider fundamentals. Still, that's not a trade. Now, you look here and you realize there's a base here. And if you've read the books that Dan suggested and you study, you know what a base is. And while it is not required to have a base, trading near or out of the base is a positive. Think about why. We've discussed this before for those in the feed, but the idea is, if a base creates a line, of support and resistance where there is consolidation, especially if it's tight being a key word, there are defensive people holding your back behind you. There's big money that has your back. That's kind of a nice thing when trying to trade, knowing that somebody else will defend that area, maybe big professional money that has an interest in the stock. Now, while the base is not required, it's just one edge that you can look for. Again, for some of you, you will not look at fundamentals. For some of you, you will not bother to look at the sector, even though I think it's good to look at it. For some of you, you'll make it much simpler and say, I don't even want to look at a base. Just tell me what I have to do to find a trade. And that's what we're going to go to next. In this case, now we're getting into a trade. Those were all the pre-thoughts, the pre-ideas to getting into a trade. Now we're into the discussion of, can we find a trade? Go to a daily chart on this same symbol. See it right here, daily, DE. And we zoom in and look for clues and layers here. Notice that support held 3 times here. Now, while that did hold, I did not trade that hold. That was not a hold. I can actually see a nice reversal up here, even though it retested, and this is a support area. But I do see some layers here. You see the 20 and the 50-day pullback. Price had pulled back right down here to the 20 and the 50-day. That is a layer. We now have price pulling back to 2 key moving averages that a lot of people watch. So we now have some layer behavior that we can look at. We've got this strong stock that broke out of the top of this base where the yellow arrow is. It broke out after holding the bottom of the base. It broke out and pulled back and held at the 50 and the 20-day. So we broke resistance, pull back, and we are now holding the 50 and 20. That is a breakout, basically like a breakout back test. It's holding up is what it's showing us. Now we go on and look for more layers. In this case, we go down to a 60-minute. And you will notice when I went to the 60-minute, there was a fib that went from the swing low at that bottom of the base area all the way up to the 114.13 area. The two fibs that most of you know, at least on the feed, know I use is the 50 and the 61.8%. Those are the only fibs I use. And in this case, that first pullback was a nice key reversal. I'm hoping, do people see this key reversal right here? The weak close and then the hard reversal. Do you see that right here? Okay. So price found support. There's another clue. So we have that 20 and 50-day daily test on the last chart. And now we have this support that just happened. So we're starting to see support on a fib area holding. Then price comes back and pulls back. It creates a little double top up here where the red line is. It pulls back and it creates a 2B. You see where it kind of comes down to the right, same area, spikes down on this hourly bar, and it's sitting back in range right in here. So you're thinking, I got my 20, I got my 50, I got these things all stacking up. I'm starting to see reasons to go. Here are your layers, okay? Breakout backtest is the setup. It's not really a layer, but it is a thought when I'm coming through of what this is. It broke resistance, it came back, the 20 and 50-day are holding, a fib is holding, and it's a higher low to be support. I've got multiple reasons to believe this area is important for this stock. Now comes the part on firing. We've seen all this. It's all culminated to this spot. We look and we see the 2B being built, and we say to ourselves, I'd have to put a stop right under that low, and I don't want to buy it just because I see the low holding. I'll take the first trend line break, for instance. Now, you didn't have to do a trend line break. There's another couple of tools. One of them I haven't even mentioned in the private feed, but another setup. But realistically, you see reasons here why it is confirming, according to the trend line break, that it is firing off the signal. You have now layered all those things together. You've got a daily helping you. You've got a strong weekly chart. You've got a stock with very little resistance above the highs. You've got all these factors that are playing in. In fact, all of these factors culminate and live around that 110 area, and they're all like colliding in the same area. So I actually took this trade. I took it a little bit later and just about this same area, and you go long, and now doesn't matter. I'm going to show you the outcome, but it doesn't matter. The 5-to-1 risk versus reward math takes care of all the losses. And I know some people are going and saying, well, wait a minute. If you're leery about this statement right now, you didn't hear me at all on the psychological page. Some of you I know I cannot fix. Some of you I cannot help. Look, if the industry averages that 99% fail, even if I bust my butt and do everything in the world, I'm still going to have a fail ratio of people who just will not succeed no matter what I do. I can tell you the reason will be psychology. There are still people that will blame others and make excuses and do no homework and you know, will look for a scapegoat and blame Dan for their losses and jump after the next stock Dan says, you know, or lack impulse control or all those things. I can't fix that. But what I can tell you is the outcome doesn't matter. The outcome is a mathematical formula that if we do our job correctly, we don't have any control over it. We've evaluated where the first resistance is. We've evaluated all of this in advance, and we know what we're doing. Now, I skipped something back here that I just want to show. I noted it here and skipped saying it because I'm, doing this live. But when I looked in this area, I did look to see that if I entered there and this stop distance was like 50 cents at 5 to 1, what was the distance from that 110 to this 113 area that would be my target? And the answer was the highs right there were more than $2.50 away from where I was planning on entering. And that is what gave me the formula to let me know this was worthy of considering. Now, some of you have asked, how do you determine if that hurdle matters? In this case, it's a pattern. It's an hourly double top, lower high. From reading and watching the materials that I've given you and understanding, that is a solid technical understanding of a setup. If I sat here and showed you, you'd remember this is a pendant that failed. The rising uptrend line, or the support of this pattern right here, is now resistance to the right. This is a double top 2T under this support, turning and flipping down. This is resistance right now if you read price. So going long here, target up to here, had to have at least been over break even in some profits, because that could have absolutely failed at first resistance. So using the tools in the class, you would have known your risk is X, your Y, your reward is Y. You do the math and say, does this meet the formula? If it meets the formula, it's worthy of taking. I see people taking trades where they're using $1 stop and the reward is $1.75. Don't call me later asking me why you're failing. I cannot fix that one. If you can't set and understand basic rules about that you will not survive after commission and slippage and errors, the problem of being wrong often, I can't fix that one for you. I also can't help the person who comes to me and says, I've been consistent for 7 weeks. I was only taking 2 to 1, but now it all went to garbage and I'm losing my butt. Of course you are, because the first bad streak and the accuracy flip kills you. I can't fix those. What I can fix is somebody who's struggling because of technicals, or struggling because they can't create or form a trade. So in this case, we saw that we had the room for this trade. Now, we take our job to fire here, and then our outcome is completely out of our control. Now, I know before, I always contradict myself because that's part of this industry is contradictions, but while I take responsibility for the trade decision, I have no control over the outcome, other than I will tell you something that I did this week that I will remind everyone of. It is better to let the trade work. Stop, targets, let it work, than putting your fingers into the pot and playing around. Don't stir it, don't play with it. If you did the proper work, all of those steps to look at the daily, see where there is support area, figured out the moving averages, found the pattern, found the fib, found the trend line, found all of these things all together in culminating to one area. And then you put in the trade, and then you screw around with it, you will end up selling too early some of it, and the next thing you know, it'll work perfectly, and you messed up your own formula. I did it this week. On win, I got smart and said, the stock is stalling out, it's not working, I'm going to sell some. The next day, it gapped up and moved up for the day. Did I miss out on much? No. Should I have missed out on much? The truth is, the best lesson would be the stock should have run up $100 in 2 days. I would have cried, and that is the best lesson for the ding-dong who does that. You don't want to be rewarded for stupidity in this business. You don't want to be rewarded for things that go right when they shouldn't. You want to be punished for those because they will punish you later. The truth is, that win decision being me outsmarting myself and saying, trade's not really working, I'm going to cut back on it. It should have been just stop and targets. If I wouldn't have touched it, then I wouldn't have had to feel bad the entire day when the stock ran up and I had cut it the night before down to small. So what I'm basically saying is, if you did all that work, if you figured your math, if you did all the research to find a strong stock with very little hurdles to the left, notice, I didn't pick one here that had 75 hurdles to the left. I picked, one that was near highs, clean, basic consolidation pattern, tried to break out, pulls back, holding support. I mean, I didn't go for outrageously complex here. Not asking for a lot of favors, to tell you the truth here. So the math takes care of the rest. We can be wrong 7 out of 10 times with 0 account damage and still be actually green in that case. Now, of course, you'd rather be wrong only 40% of the time or 30% of the time, and then the money comes even quicker. But the truth is, for many of you who have struggled, you'd be happy enough just to be profitable. And so let's work on profitable, not worrying about being right. Now, in the case of this trade, I did scale on that one. It was a 5-to-1 trade. I actually did some more advanced stuff that I show on the private feed and was able to make a lot more than 5-to-1 on this trade. It was like 20-to-1 when it got to that spot. But the idea here is that you execute based on those rules and conditions and layers, and then you hit your exit, and now it's a runner. Now, today, my DE dropped $1.57. It averages $1.44. Kind of a negative day, and I'm not pleased about it, but it's up to the market now. Is this going to become a huge winner, and am I going to be selling this at 130, or am I going to be selling this backtracking on a moron exit near 110, the remaining shares? I don't know, but that's not my job. My job is to let the rules run the trade, simply to make sure that I allow the math to work. And in this case, math worked. Is this a big winner? Absolutely not compared to some of the other trades I post, but it's the principle of understanding the layers that are involved. Now, I need a yes or no. Did people understand how to create a layered trade by watching this? We do. Okay, so that looks like people are getting what I'm saying. So now we take a culmination of all of our prior learning, and this is how we format it for a trade. Now, the negative is when we're doing breakout trading, when I'm doing breakout trading, I cannot do all this. If we go back to that prior slide, right here, I can consider the strength of the sector. I can consider the fundamentals if I want to. I can consider the strength of the weekly chart, like I have done on many charts that I've called live on breakouts. When I move down to the next time frame, I can even qualify if there's a base there. In fact, I'm going to say there should be a base for breakouts generally. Breakouts are much easier and more reliable from a base. Int. Without a base, odds drop. Now, knowing that, after that, I have to admit, I'm screwed. Pullbacks are gone. We don't have back tests. We don't have fibs we're necessarily using. We're not necessarily using support and resistance layers the same way. We're not using patterns the same way. We're looking for pure strength. So when this happens, in this case, if we're doing pure breakout, unlike this example, once we do the qualifying factors, your job is just to read high volume breakout with strong price action past the breakout point. I will get into in future training. In fact, I'll make that not necessarily next week's, but the week after's in the private feed. I will spend some time more on breakout. I have not put enough time onto that. But what I want you to understand is the layer concept is harder to use in a breakout situation. You still have the qualifying factors that you can create, but you're not going to be able to stack up those 7 defenders underneath you for the trade. The benefit of a breakout trade is if the market is right and breakouts are working and you catch a breakout, well, it's been compressed in a range. The tighter, the better. And so if it leaves that range, there's a possibility that price will act completely different than its prior recent action, and you will catch it in this tight range, and the average true range will expand, and you will have a big winner, even though your accuracy will drop. That is acceptable. For those of you who are true breakout traders who have succeeded at it, it will be easy to have a mix of more than one tool in your tool box, because you're used to the inaccuracy of breakout trading, but you know the reward it provides. When you're doing pullbacks or when this market becomes more difficult and we're in bearish conditions and the rest, I can show you how to excel and use the same belief system, not as much accuracy, but you can use that same belief system to create more layers for trades. Shorting is harder for multiple reasons, but it also moves faster. It works like breakout. And so we'll get into that later. We're not in a bear market, and I have not been focused on that. But realistically, you just need to know, for those who have already done breakouts successfully, it's not hard for the transition. For those that cannot succeed in breakout and really struggle with breakout, pullbacks may be more of your style, but you still have to accept the loss formula before you even begin. You have to expect that you're going to lose before you take the trade. I think many pros believe you should say to yourself, the money's already gone before you even entered the trade. You've accepted it fully. It's gone. Now let's just simply read the chart and see what's going on. It makes it easier. Now, I'm doing one futures example, and I'm not doing a whole long extended list of layers like I did before, because you should know the formula now. We're going to walk through one that CLT and I both took this trade. We were both watching it, but I want you to understand how the layers stack up. This is all on one screen. We didn't have to go through multiple steps. In this case, this is the NASDAQ futures NQ. The same as stock, guys. Futures just trade all hours, a little bit different on the time, and they trade Globex, which is overnight. And other than that, it's like a stock. The only benefit is that's an enormous benefit is it works. Your stops work in more hours, and you can trade it more hours. So if I had been more focused last night and prepared, and when the market was more volatile, I may have been ready for that short in better shape. So in this case, NQ, left-hand side, this is a daily chart. Daily. The daily on this chart, you can kind of see there was a TRL here, and 1, 2, kind of up here, stopped it. And there's support here, 1, 2, 3, and price was pulling back towards support. And there's a 50-day moving average in yellow here. Price hit it once, and then came back to it again and retested. So we have price holding and testing a 50-day. Now, that also, in the middle chart, it's a 240-minute chart. You'll notice I drew the top 2 peaks, and I duplicated, and we have a rising channel. And we actually undercut the channel. We bent below the uptrend channel. That's where we bottomed out there. Did I take that trade? Admittedly, I did not take that trade. Did it qualify as a long? You bet. Do I catch everything? Not a chance. So I'm too busy doing too many things. I have a family life too, so I miss trades all day long. In this case, I did not catch that trade. Next thing happens is it broke this downtrend line right here. Price went above that and pulled back and started to create some support right around that downtrend line break. If you go to a 60-minute chart, yes, the middle chart is 240 minutes. 240 minutes. And then you go down to the 60-minute chart, and you'll look and see how I saw layers and how CLT and I both took this trade. I don't remember exactly where he entered, but I entered right around, God, I forget it, like 78, I can't remember. 53, 70, I forget, I don't even remember. But the end result is you have this lift up. That lift up is right here. Price pulls back, creates a double bottom, almost like a triple bottom area. It happens to be a 50% fib. It actually happened to have an uptrend line over these two lows. When I went to my 30-minute, I had an uptrend line right here, and it undercut it and then snapped back hard right in here, where my point is. And price now had done multiple things. It held a 50-day. It held the bottom of an uptrend channel. It reacted off the bottom of that downtrend channel, uptrend channel. It broke the downtrend line. It retested the downtrend line on a back test. It held the fib. There was a small fake down of an uptrend line. If you look over on the 240-minute, there were actually matching lows that showed this pattern showing the double bottom, basically. So all of this culminated into a long. You go long, stop underneath the low or under the fake out, depends on when you get in there and see what your area is, you fire and it's up to the market. In this case, embarrassingly, I think I took 40 points on this, and it kept going without me even more, and I don't remember what I exactly made on this trade, but I know I didn't take advantage of the entire trade. I remember beating myself up for selling too early. I do it too, just like you guys. So when I'm preaching to you, just remember, I'm a sinner also. I preach, but I also sin too. I sinned this week live in front of everybody when I reduced a trade that didn't have a stop or a target in its sights. So admittedly, I got smart, and that's why I say play dumb. Stop being so smart. The trades work without you better than with you a lot of the time. So this is a multi-layered trade. You stack up your reasons all together, and you make them. Now, was the 50-day enough to take the trade? For some people, maybe. Not me. 50 days bend and play games, and on a symbol like NQ, maybe the range is daily is 6 points or whatever it was at this point, and no, what am I saying? Maybe 12, 15 points, whatever it was, and so an undercut there could have been an extra 5 points, and I wouldn't have had a big enough stop to cover for it. So we need more, at least in my case. The downtrend line break, that was a nice touch. This added proof that somebody believed they saw that channel just like I did. The pullback to the downtrend line holding up and creating a triple or double bottom area, the fib, that kind of helps. It gives you a little bit more confidence. You got the right spot. The fake down under the little uptrend line, one more little tiny, nail in the coffin for bears. So I'm suggesting that when you create a trade, you use this layer process of finding and stacking reasons. I know if it's a breakout trade, you can't do it the same way. I know some of you have tried to use the word trend as being one of your layers. It's not. We're looking for a culmination of behavior in an area, all that connects to a similar spot, that all defines reasons that professional money or a large set of traders based on tools that are readily visible will take an interest in defending that area or making a trade. For some of you, that will be fibs. For others of you, that would be a trend line. For some of you, it would be a stochastics, which is popular, or MACD. For some of you, one of those layers may be market profile. I don't really care as long as they're ones that generally the market is used. If you're the only one using it, I don't know that I can trust it, because the truth is every tool in the market that I see generally works because a lot of other people see it. In other words, the reason the 50-day works is because if everybody thinks that other people are using the 50-day, it becomes important. If everybody believed that the greatest trader in the world said the 103-day was the most important one, And for the next 3 years, it was all on TV and the rest. I'm sure the 103-day simple moving average would become important, and reactions would come off of that area. Human beings are the reason this happens, not just computers. And so that's why they're important and they react. So, and I need to repeat, if you do not, because some people won't come forward and say, I still don't get it. If you don't get what a layered trade is after this event, please, please, please email me, randy@zangertradingu.com. Tell me you don't still get it. I will send you a few more examples if I can figure them out, but you're going to have to wait. And if you're on my private feed, you'll see hundreds of them. The guys are getting, and girls, I'm sorry, that was very rude. The folks on the feed are becoming incredibly good at putting up some amazing trades. In fact, so good that I am taking trades that aren't my ideas, that are their ideas because they have layers and they make sense. When I see a rookie doing, exceptional returns that's beating 99.99% of pros, a rookie beating pros, I know the system works. The truth is, I truly believe that the numbers game will solve all the rest. You cannot lose if you behave properly in the market, understanding risk and reward and understanding how to select trades. Truth is, much of what we do is not about the trade as much as it is letting the winner run. The losses can be handled consistently by being taken. We just don't want them to become large. Now, of course, I can't promise anybody results because every human being is different, but I believe in my heart of hearts that anybody can succeed that is confident that they can follow through and take the steps of doing a multi-layer trade, meaning that they have a lot of reasons backing their trade, and it has the risk reward. The risk reward is the real component that energizes this entire process. Without it, even with all these layers, I have to tell you, this class, if we didn't have risk reward, this class would be very different. I'd have to put up an M bottom. I'd have to put up, maybe 3 other real important patterns to look for, and the rest of the time you'd be bored to death just looking around waiting for those few patterns where nothing else matters. If we couldn't figure out the rest of these things, you would only have a few patterns to work with because you'd have to just sit around and let the math work, even though you couldn't control it as much. We have enough layers we can put on a trade where we can change accuracy. We can squeeze into trades, catch winners that other people can't. So we have some edges here that are very strong. But again, if you don't believe, you won't succeed. It's pretty much, that part is in the bag. If you don't understand what a layered trade is, you need to, at this point, email me. Now, if there's any other questions, I'm going to just look at we've gone pretty long here. Let me just see. I'm going to go a few more minutes. Let me just see if there's anything else. Where is... Bear with me 1 second, guys. Somebody asked a couple of quick questions we'll squeeze in. M bottoms, what is the difference in peaks from the highs that are still considered an M bottom? I do not have a formula for this. I wish I did. I'm sorry. The peaks have to be very close in the same price area, and I don't have a formula for this or accuracy. I can ask somebody like MCW, who's a quant, who can maybe tell me, but the reality is we need them to be fairly close in the height of where the peaks are so that on a order flow basis, people stack up all those orders in the same area. The trade does not work without that cascading order flow that happens as shorts cover and longs buy. It needs to be done in the same area, or else you don't get that lit fuse. Without it, you don't get the explosion. So that's important. I wish I could answer you with any kind of definitive mathematical equation, but I don't. Let's see. What is my favorite set to make an initial purchase? I can say lately I've done a lot of back tests of a base. In other words, if I'm not good on a breakout and I don't like taking a breakout, or it's not a clear breakout on strong volume, I will take a flip of the resistance to support. So it would be a breakout, makes a higher low above the base, and then I would find a reason to go long above the base, knowing that we're outside of the base, and as long as it's holding that resistance as support, I want to find layers to get long in the direction of the new breakout attempt and move. Next one. If you see a stock gap down after hours past your stop, will you ever try to get out of the stock after hours, or do I wait till the next day? It truly depends. If I look over and I see a gap on one of my stocks, like I missed it, like earnings or whatever it is, and my stop was in a place and it over gaps that area, I'll watch for a few minutes and I'll look. And even if in the after hours, if that stock is behaving poorly, and this is where it gets into tough. If you're not a good chart reader, then this is going to take time to learn. Bear with me, I have to take a drink here. But I'll look at that price action to determine, is it behaving? If it's just falling down, lower highs, lower lows, just cannot get back up, I don't see any real defense going on, yes, I've cut positions that way. I have cut positions when they don't behave on a gap down. I also showed in the feed just this last week the reason I didn't sell on DB's slice down, and that was because even though it gapped down, the behavior right afterward was so good, I wasn't having to sell. So I have to admit, once I'm already below my loss level, it's too late. Now I have to just evaluate, is it working or is it failing further? For those of you who are the kind of people who would defend a loser or that would make a mistake like holding losers, I suggest you immediately sell it because you have a psychological problem. You will end up holding a loser. For those of you who have the ability to look past and read price action, I would suggest that you evaluate the follow through or failure to follow through and determine whether you sell or keep the stock. These are things I try not to talk about, admittedly. I contradict myself because I want to protect people from doing stupid things, which is to hold a loser too long after it already broke down. So it depends on your skill level on that one. Let me answer another couple and then we're done here. Okay. With today's action, are we no longer in a breakout market? The answer is yes. Breakouts are effectively paused at this moment. The reason is that we're currently downtrending. Now, we're not downtrending on a daily chart, and we're not downtrending on a weekly chart. But on a 30-minute chart, for instance, or we're moving down, and we're coming to an area of support where we can bounce. But it would be better to have the market recover and resume some stability before you try breakouts. Believe me, I was watching OCUL all day. Everyone on the feed knew that's when I wanted to buy was OCUL. And I had to just sit and watch it. And I saw it go up, whatever it was, 70-something cents. And I could have bought it when it was up 13 cents or whatever. And I just sat and watched it go up and down without me. But the behavior of today's market did not align with a great period to buy a breakout. Most stocks were breaking down. Now, do I like the action? You bet. On a terrible day, this stock was acting great. So am I stalking it? You bet your butt. But do I want to necessarily execute today during that? No, I don't think so. I guess the answer is the more skilled you are, the more you ignore me. The more consistent you are, the more you ignore me and just use my tools. The less consistent you are, the less skilled you are, the less confident you are. Do less, prepare more, read more, see more, Pick your stocks pickier, less hurdles, less trouble to the left. Wait for it all to stack up. Make sure you have your R, do all your layers, and then fire. The guy who or girl who is skilled doesn't need to check the scope 6 times to shoot the rifle. The person who's sucking needs to stare through that thing 30 times to make sure and check themselves before they do anything. Now, I'm not presenting this in a way where I think people should over-evaluate, because at some point, just so you know, if you're afraid to take a trade, you're dead anyways. You could work a whole week and then finally you get one, and it still has a percentage chance of being a loser. Let's say you're 50%. It's still half the chance it's going to be a loser, even with all that homework. You cannot get into that belief system that you ever are going to get it to be 100%. You cannot believe it. You just have to know you put in all the effort you could to determine a great trade. After that, it's up to the market and risk reward. And for those of you who are really struggling, I sent out a report this week. Those that are that were on the feed know that I sent a report this week to say, you know, a lot of people are killing it, and some of them are beating me, and they're just, I mean, they're using tools that I don't use, but they're layering it with theirs and just killing it. Remember, those people, I'm still here, but reality is, let's pay it forward and help the people who are struggling. I'm going to create some very simple resources for those that are struggling, and I'm working on that in the feed. What will happen is I will create a separate meeting where we will discuss a few simple things to do so that we can take out all the noise and you can make it 1, 2, 3. If I give you something really simple where you don't have to chew on much and you can just follow a process, the risk reward will still take care of the rest. I know you won't be killing it because you don't have the skills yet, but at least I can get you on the right track. That is the goal. And like I said, I want everybody to be profitable. Some of you, it's already rewarding knowing some of you are killing it, and not always just in easy markets. That's the other component that matters to me. Dan mentions MAs a lot in the newsletter. It seems that they are more interested. No, Dan is 100% about price action. There is no difference between, Dan is a pure price action reader. I'm a little more technical with price action reading. He just reads strength and weakness and his patterns. I tend to read a little bit further into it, but his MAs serve as support and resistance in a lot of traders' minds, so it's why I use them as a layer. Even though I don't need them, they are a layer for me. Same idea. Dan reads strength as good as anybody. He sees strong bar, strong behavior. He's looking for that for his stocks. In fact, I mention in the private feed all the time that, you know, we talk about when resistance or support is treated like a dirty dish rag. And the funny thing is, you would think that, like me, I try to buy support very often, but Dan wants to buy when they treat resistance like a dirty dish rag. So you understand that the lessons that I teach are basically many components on how Dan thinks. I learned very quickly watching Dan that when he trades breakouts, he's often trading a stock that's blowing away TRLs and blowing away things that it shouldn't be. That's showing that it is massively strong and powerful. So admittedly, the way I learned to trade some breakouts was looking at stocks through the eyes of what resistance is getting taken away so easily. So it is an important component to it. Let's see. Can you expand? Okay, please talk a little bit about. Okay, today was actually really easy in the market. It wasn't a hard day for the market. The only part that was hard was I just was over my head with too many positions. Today was a cakewalk in understanding of what happened. Again, this 100% on me. There was no problem in the market today. Admittedly, I'm still recovering from having a feed and having to try to explain everything to people. But let me bring over a chart here. I've got the wrong one up because I didn't prepare to talk about this, but I might as well just do it real quick. Today was really, let me, bear with me 1 second. I didn't prepare this, but today was easy because all that happened was yesterday was the first warning signs, and I mentioned that I was seeing some problems in chat. Just said when some people were talking negatively, I was like, I see some problems, but it wasn't anything major. And then at the end of the day, it started to accelerate. So that was not something I was paying attention. I actually went out and was busy in the rest last night and wasn't paying attention. And the end result is we built bear flags. So from a technical standpoint, I don't know that we had much to worry about here other than a simple trend line. And that was, I saw this happening here. Let me try to, I'm doing this real time, so it's kind of messy, but I saw this happening right here. And then I saw the bottom of the bear flag. Bear with me, this is very hard because they snap and it's nasty. Anyways, I was so busy because I had like 13 positions on, which was the nightmare of me managing. But if I wasn't so focused, I even said this morning, as it was happening, I was just so busy trying to unload stuff and get myself organized on the little bounce. But even today's little bounce, I said it right to everybody and showed it in the private feed. This was nothing more than the uptrend line came back, it back tested it on the lift, and that bounce was for the sake of just simply coming back to test that bear flag, and then boom, the whole rest of the day was just down. We had one moment where there was a thought that we were going to try to do a double bottom behavior here, and it just failed further. I had been telling people in the feed, and CLT and I have been talking about the mid-50s or so was where the action started, not only from a couple of tools he uses, but from other things I was waiting for in the market layers. But realistically, I haven't checked to see if this was measured, but I don't know. I don't know what the size of these were. Bear with me one sec. I don't know. We kind of made, measured breakout of this first leg. It was a pretty reasonable drop, and so today wasn't really that hard to understand what had happened. It was the same behavior in the NQ. In fact, I told people when this was dropping, as it was hitting it yesterday, there was an uptrend line from these lows down in here that I had been waiting, that it didn't tap the last time. And yesterday, or last night, was it? Yeah, last night, it tapped that. Somebody wanted to short here, and I was like, no, it tapped right off of it. And the next thing you know, overnight, while I'm sleeping, here's your TRL. 1, 2, 3. This was just a double top to T, and boom, breaks out of the bear flag, comes back for a little tap near here, but it was underneath that, and that's all she wrote. So today wasn't a hard day by any means for reading technicals. I should have made a fortune in the futures today. I have avoided futures because the trading range has been just so god-awful I would be broke. But realistically, if I didn't have so many darn positions on, I could have reacted better. That's my fault. Let me go to the next question. Let's see, please, what do you mean by treating support like a dirty dish rag? I'm sorry, yeah, I talk in terms of my own terms. I know we're dealing with people in like 20 different time zones. But realistically, what I'm trying to say is it ignores it or wipes it out like it's meaningless, like it wasn't there. So what I do is gauge the behavior on support and resistance to understand what is working and what isn't. So, for instance, what I can tell you, and some others in the feed would tell you, is that recently Bears haven't even had squirt guns. They haven't even showed up with any power. They haven't had a weapon at all. Every attempt by a bear to even show up to the game has been thwarted, killed immediately. Now, why do I say this? Because I told you in the class that bears prove at support. Bulls prove at resistance. It is nothing. There are no bears required for us to go back and test support. They don't need to show up for that. But if you're going to bust support and break below it, you need bears to do that. You need somebody bearish to have broken that support. In the theory of what I explained, it's pretty simple to understand that if you're in a market or a stock, if you're looking at that MTSI, we were talking about this stock, MTSI. I think I can bring up a chart. And I saw this stock was just incredibly, incredibly strong. It was when I was, here's an hourly chart of what I was seeing. And I just saw every bar was just climbing. And I saw it was breaking into the gap. And I was like, geez, this thing is a monster. It treated resistance like it was non-existent at the top of that edge of where the gap down was. Non-existent. It came up to it, tapped it one bar, and just like ripped through it like a dirty dish rag, as I joke around. It just ripped through it. That kind of behavior is showing outrageous strength, just as the market today was showing outrageous weakness by not even being able to step above back into the bear flag. It just literally tapped from below it and gave up. Think of these little tiny tests as informational clues of what's happening. Look, guys, if girls, I'm sorry I say guys, folks, if we're coming down to test a major sport level that everyone has been looking at for the last 6 months, and it slices through it like just goes right through without even pausing through it, something's really wrong. Because you would think if all of these people thought this was important enough to defend for the last 6 months and suddenly it just wiped away in a flash, something's very wrong. So we read these behaviors around these key points to tell when something's going on. Recently, all support is held. Every resistance has been generally wiped out on the way up. There was a reason why this move happened, as many of you know on the feed. I called that we were about to go in an up move for stocks, and that was because of the trading range we left. But realistically, you have to read these reactions to understand and see this. Do you place your futures trade through trade? IB TradeStation works also. I've done a lot more IB in the past. I actually have another account. Who the heck is that with? My brain is not connected right now, but I have another one. I can't think of it, but I have another futures trader. Oh, and I have some money in, if I really needed to, I have some money in Ameritrade now. You can do futures in there as well. So I have plenty of places I can do futures. It's not about the place. You can do SPY to start out with. Futures have a benefit because of the leverage. I can tell you that the people who trade futures have higher percentage returns if they're skilled. And if the year is in 2017 and the trading range is 2 points. In this trading range, I can tell you right now, I couldn't have made any money in ES. This year on ES and NQ, I think I've called 2 major trades the whole year on longs. This would have been an awesome short day for me to call. I just admittedly had way too much on my plate. So next one, let me see. Do you place? Okay, can you give us a quick overview on my add-on method? Add-on is the same as a new trade. Wait till you get another entry, add on to the trade. I don't have an add-on method, I have to admit, that's very well formed. In the case of Dan, he has his own golden rules that say you start out with, maybe, 50% of your position, and then add another 30, and then add another 20 as it's breaking out. That's perfectly fine to me. I do some of that when I'm doing breakout only. When it comes to a second add to a pullback entry, I tend to try to look for a whole new set of layers to add when I'm smart and treat them as separate trades. Okay, and last question. I'm going to do one last question because it's been 2 hours in about 2 minutes. So last question, DE scale out, and where I still do not understand the scaling out when a trade is working. Okay, so you write your rules for what you like for scaling out. I will tell you what I do. I scale out a percentage at 5-to-1 risk reward. That percentage, I give myself the leniency to choose that percentage based on market activity. So if the market is in a strong uptrending move and I'm trading within an uptrend, then I allow myself as little as 20% off at the 5-to-1. And I can sell as much as maybe 50%. I generally won't sell more than that if we're in an uptrend and things are moving well. If the market is in a chop zone, I may sell 70% of that position at 5-to-1 and only leave 30%. Because I know that the risk of holding a position for longer in chop, if they're in a range bound or trading range market, they're not getting far. So I may not want to leave the money there on the table knowing that I'm just not getting very far. I'll leave a smaller chunk. If I am counter trend trading, meaning totally against the trend, like this short that you would have had here, where the market is in an uptrend and we're getting a reversal signal, I would have sold probably somewhere in the neighborhood of about 75% to 80% on the 5-to-1, and everything I make after that is gravy because I expect that I know that I'm against the trend, and all profits I make are a gift trying to fight the larger trend. Now, do some people have different rules than mine? Absolutely, but my accuracy on counter trend trading has never been as good, and so I want to be more aggressive with scaling, and with winners I want to be less aggressive with scaling with the trend. That pretty much explains the way I handle it. For many of you, you will handle it differently. Like for instance, if it's breakout, you may want to handle scale outs by doing what Dan does. 20% out, 20% up, you sell, a portion of your position, and then you scale out based on when it breaks the 21-day or it breaks the 50-day. I don't do it that way. I scale out 5-to-1, the first part of the formula, and then after that, I do it based on behavior. Here's an example. I called the DDD live when I took it. It wasn't my idea. Oh, now TC2000's down. That's great. I called along in DD where I took it, the DDD at like $19 and something cents. I forget. And maybe it wasn't this 1974. Anyways, I called the long where I was taking DDD. It came up in the chat room, and I made the 5-to-1 somewhere in around, I want to say in here, I forget what it was, like $21 or something. I forget where it was over 5-to-1. And then we were sitting here on this behavior. Now I can't see it because this is an hourly. Let me see if I can get it for you real quick. Yeah, here it is. 1, 2, 3. I saw a triple top after this huge move. I mean, this is a huge move. Huge move. And I literally saw a triple top, and I saw it start to break, and I said, in live in chat, I said, I'm cutting down my size of my DDD trade. This is an extended move. It had moved up huge percentages. It was straight up. There was no pause. I looked at the behavior, and I said to myself, this last push was larger than some of these others. It pushed up, and I saw it consolidating and tightening up, and then it didn't succeed on the breakout of this little tiny triangle-like behavior, and so I just said, I'm reducing it. Was I right at that time? I was right for about 60 minutes. And then it went back up, and it nailed the highs, and in the end, my exit here is fine now that it's lower. but admittedly it hurt when it was up here. I would have liked to have had timed it a little better. In a perfect world, the larger this cushion becomes, the more you want to be understanding. If I had a bigger cushion on this trade and I didn't enter like here, and I had entered down here, I may have said, no, you got to flip down for me to take me out. It would have had to have like turned this into resistance and closed lower. And so I may have been sitting down here thinking, I'll watch this 2130 area to cut it. Anyways, that gives you a little idea of kind of scaling. My last exit, though, is usually called a moron exit. The last 10% of the trade are trades like MT. I'm still long from $2.06. The stock is all over the place, $7 to $9, and I'm still holding because who cares? The last 10% and the thing's a huge winner. So moron exits are the last 10%. I'll let the thing go back 90% of the direction of my trade just to try to let a winner run if I like it. I still own DV, even though today it had a horrific day behavior-wise. The stock dropped 6.5%. I still have my runner in DV. EVBG today dropped. All of my stocks generally dropped today, except for EXK and what else? I'm just trying to think. That's not right. Anyways, the end result is today they all dropped, and the answer is I allow it because of the runner allows it. So next one, let's see. Can you have a quick overview? Okay, so that pretty much does it for tonight. For those of you who are from the my feed, you'll be back. We'll do this again next Wednesday. For those of you who are not, you can sign up. Admittedly, I'm losing my mind. I probably should close it up because it's just too much. But admittedly, we're growing. So in the meantime, if you have any questions and the rest, shoot me an email. I hope this helped, and I hope you guys got to see a real-world example of a layer setup so that it's not just theory, it's something you can apply. Have a great night, everybody.